G'day, it's Stefan Angelini on the 14th of March, 2023 for another little economic wrap. What are we looking at today? We're looking at the Australian rental crisis and looking at just how expensive it is to rent in different, areas in Australia. We're going to look at the Silicon Valley Bank and the effect it has had on markets, on interest rates, how they've sold part of the UK arm already, but also the effect it's going to have on crypto. So if you didn't know, they're a big bank for the crypto environment, for the startup environment. So what sort of effect is that happening? And then finally, we're going to finish it off by looking at how Australian Ethical has divested their shares in Lendlease. So this is a bit one for all you sustainable investors out there. Just remember, for everyone out there, this is just general information. If you want any personal advice, please go and consult your licensed financial advisor, or reach out to hello@angeladvisory.com.au to get your own advice. Now let's look at what's going on. So the Australian rental crisis is getting worse and worse and worse. So we are at our lowest level in 5 years. And basically what is happening is there's less stock available, more people coming back into Australia, and it's just causing a lot of issues in rental vacancies and availabilities. So from a PropTrack record in February, it was the vacancy rates were down 0.1% to just 1.47% Australia-wide. Now let's have a look at a few charts for rental prices here in Australia. One thing that amazed me is that Melbourne is actually the most affordable rental space for houses in Australia. Canberra is the most expensive at close to $700 per week for a house, and Melbourne is in between $450 and $500. Now, about in 2020, Melbourne was the fourth most affordable, so it was still very expensive compared to its other Australian counterparts. But I guess because of Victoria's long-lasting shutdowns, people moving out of Victoria, going to different states, it's really had an impact on rentals and rental prices. And therefore, I guess as people start to move back to Melbourne, you might see less vacancies in Melbourne, and the cost of rentals actually going up. In units, it's a bit of a different story. So in houses, the most expensive is Canberra, then Sydney, then Darwin. For units, it's Sydney, then Canberra, then Darwin. Melbourne is the third cheapest place to find a unit. The cheapest is Adelaide at about $400 a week on average. Melbourne is $450 a week on average, and Sydney and Canberra are above $550 per week on average. So, and you can imagine with the average wage here in Australia, it becomes unaffordable for a lot of people to live in the likes of Sydney and Canberra. But yeah, it's going to be interesting to see where these go. But with no basically new property starts, relying on the government to pump out this social housing strategy, there's going to be a real pressure on rental prices and rental vacancies over the next few years. So it's going to be really important for private sector to try and do something, but with the cost of construction continuing to rise, there's going to be a lot of issues going forward. So let's just watch this space. Let's go back to the Silicon Valley Bank fallout and the effect that's having on markets around the world. So the Australian market finished up last week. The US market had a choppy start, but actually was about even yesterday. But the European markets and Asian markets did fall off a bit because of Silicon Valley Bank. So they had pretty large sell-offs just because they see that the ECB is quite reliant on a bank like that, especially startups. And in the Asian market, a lot of the Asian startups use Silicon Valley Bank and VCs from America. And therefore, there's been a bit of an issue just with confidence over in Asia, which has caused a bit of a sell-off. So let's look at Silicon Valley Bank and how this might have an impact on interest rates. So because of the US banking collapse, there are people now saying that we may not see as bigger rate rises going forward. With the economists in news.com.au, economists now saying that the RBA will lower the interest rate rise to potentially 0.1% instead of 0.25% as is originally anticipated in April and May. So we'll see where that takes us, but already rates have been increasing quite a bit. Goldman Sachs, who's an international investment bank, superpower, have come out and said that when they initially expected the basically American Reserve Bank or the US Fed to hike rates by 0.25% in March 22 when they meet, but now they're saying they actually think that they're not going to raise rates because of the financial stress as a result of that banking system over in the US. They still do anticipate that there will be rate rises in May, June, and July to take their rates between 5.25 and 5.5%. But if there is a pause on rates, that will give some extra confidence back in the market, given there were comment made by Fed Powell to indicate that they were going to raise rates close to 0.5%. Most people do still indicate that it may be around about 0.25%. But it's just really interesting to see that a big investment bank has come out and said they don't expect a rate rise for March. Now, because of the SVB fallout, some of the parts of the bank are already getting sold off. So HSBC has bought the Silicon Valley Bank's UK arm for a nominal amount, for £1, believe it or not. So over the weekend, it snapped it up quickly, basically saying that now all the deposits that people have are protected and there will be no taxpayer support for this bank over in the UK. So it protects the people, protects the people's money, protects the depositors over there. And basically this bank is a support for hundreds of UK tech companies over there. So HSBC have said it's a great opportunity for them to divest their client base, but also they have the balance sheet to protect all those different depositors, which is super important. Now, let's look at the impact that the Silicon Valley Bank may have on crypto markets. So there was a really big digital asset giant called Circle, they work called a stable coin. So a stable coin is meant to peg the value of the coin with for a 1-to-1 to the US dollar. So one stable coin is $1, and that's the big thing of allowing people to then trade via the crypto environment or through digital assets. Now, some of the biggest banks to do with crypto were the SVB, Signature Bank, which was recently closed by the New York regulators. And importantly, there was a shutdown of crypto-friendly bank Silvergate, who was actually one of the first companies to ever allow easy exchanges of money from crypto back to dollars. So with a lot of these big banks now shutting down in the crypto world, and therefore there's going to be a lot less confidence in getting your money out from cryptos, and a lot more regulation going around getting banks set up for these different kinds of companies. So I guess if you're in crypto out there, just be aware, because you might see a bit of a choppy environment going forward, which you're probably used to by now. And then finally, let's just kick it off. Let's just finish it off with a bit of a sustainability piece. Australian Ethical pride themselves on having ethical investments and keeping and maintaining what they invest into and ensuring everything is above board. Now, they've recently sold out of Lendlease and everything to do with Lendlease because they do not feel that they are doing enough to help the koala colonies in one of their more recent developments in New South Wales. They said they've been trying to lobby against this for about 4 years now, but finally have taken a stance to see they don't see them actually having any push in the say and have gone out of it. So they would like for companies like Lendlease and every other business they invest into to have more biodiversity protection and take that seriously, especially amongst the koala population. So that's a bit of an update for today. Thanks a lot for listening. Have a great day and a great week ahead. See you later.